I think in Bitcoin's case, and I haven't proven this in the sense of going to the wallets, but I shouldn't say. I've seen the wallets that were accumulating Bitcoin in advance of the Bitcoin ETF approval. I will argue those were related to BlackRock et al., that they were basically accumulating some that they could then go buy from and make a little profit too. It's been kind of a crazy week. Maybe you know what, magnanimous might be that I did take full credit for the pump this week in Bitcoin because I pulled out the green pants last week, and we kind of predicted that it'd be a pretty good week, which it has. It is all about the halving, right? It's we had the demand shock, price went up. Now we got the supply shock coming, and the supply shock, it's actually big because I don't know if you guys put out the data, somebody put out the data, 69%, maybe that was a lie, 69% of a BTC hasn't moved in the last 12 months.
Welcome back to another exciting video in our crypto adventure. There has been a recent emotional roller coaster in the Bitcoin market, with investors experiencing a rise of excitement. The fear and greed index for Bitcoin reached an amazing 79 out of 100 a few days ago, which is similar to the levels observed when the cryptocurrency achieved its all-time high of $69,000 back in November 2021. What has been the source of this craze? It's actually the astounding performance of the newly introduced spot Bitcoin ETFs. These ETFs have had an incredible surge since its launch on January 11th. Combined, they have amassed an astounding 264,232 Bitcoin, giving them a market worth of more than $13.5 billion. BlackRock's IBIT is leading the way, taking home an amazing 43.89% of the entire prize, or more than 115,980 Bitcoin. Fidelity is not far behind, with 83,928 Bitcoin, representing 31.76% of all the holdings across the 9 ETFs. The fun doesn't stop there, though. Adding gasoline to the flames is well-known hedge fund manager and Bitcoin investor Mark Yusko. Yusko asserts that the excitement is far from over and makes the audacious prediction that Bitcoin and other cryptocurrencies will see more large price increases in the weeks before of the 2024 halving. We'll dive in depth into Mark Yusko's most recent observations and analysis from his weekly roundup with Blockworks Macro in this video. Come along on this exciting adventure with us as we explore the possibility of more cryptocurrency gains and identify the main causes for the market's extraordinary speed. Prepare yourself for a unique look inside the thoughts of a cryptocurrency maestro as we analyze the signals and identify the future prospects for Bitcoin investors. Get ready. Fans of cryptocurrency, Mark Yusko will be leading us on an exciting journey into the world of cryptocurrency. He will share with us his thoughts on the future of the cryptocurrency market in the coming weeks. Let's hear what he has to say.
We had an aggregate demand shift. That's only going to accelerate. Increasing demand for ETFs, it's not going to be linear. It's going to be exponential. Now, it'll take a while to get to the knee of the curve, but as people like Vanguard and UBS and Merrill Lynch eventually drop their prohibitions against the ETFs, more capital will flow. But even with the largest firms still adamantly against, you've seen individuals and institutions. A big chunk of the BlackRock capital is coming from big places, sovereign wealth funds, pension funds. So that demand shock isn't going away. And there's 900 BTC a day produced today on April 8th. I think it's interesting that now the estimates are that the halving is going to occur on the same day as the solar eclipse, which is kind of wild. When it was going to be 420, everyone was all excited, and I think it's going to be 48 now. It looks like the number, but we don't know for certain. But if it does coincide with the solar eclipse, I think that's kind of wild. But that demand is challenged because this huge amount of coins. You got 1 million from Satoshi, whoever, and then you got estimates somewhere between 3.5 and 5 million coins that are lost or stolen, multi-sig, that are stranded, whatever. So you're talking, and then you got, what was the number? Like 10 million held by individuals, most of them hodlers who have said, can pry it from my cold dead fingers. The supply shock, though, we go from 900 to 450 a day. That's a big deal if that hodler group, or hodler group, however you want to pronounce it, won't give up their coins and there's less coins for the miners to sell. The other problem is the miners haven't been selling all of their coins. Some of them have, but some of them have been hoarding a little bit. So the supply problem is real, and it's only going to get more acute.
Since spot Bitcoin ETFs have been so successful, altcoin investors' focus has shifted to finding the next big opportunity in the cryptocurrency market. Prominent personalities in the cryptocurrency space, such as Raoul Pal, CEO of Real Vision, are beginning to emphasize Ethereum ETFs as the next big thing. Raoul Pal is firmly convinced that the U.S. Securities and Exchange Commission, SEC, will be compelled to greenlight spot Ethereum ETF applications, mirroring the pattern observed with the approval of Bitcoin ETFs. SEC Chair Gary Gensler, in various interviews, has clarified that legal pressures played a role in the approval of spot Bitcoin ETFs. Notably, the judge presiding over the Grayscale case against the SEC argued that the agency lacked justification to deny spot Bitcoin ETFs, especially when they had already approved Bitcoin futures ETFs that were equally susceptible to manipulation. Mark Yusko took a reasonable stand, arguing that the regulator should allow Ethereum-based spot ETFs. Yusko is still confident, though, that Gensler won't approve any of the demands, not even those from powerful companies in the sector like Fidelity and BlackRock. Returning to the interview, let's hear Yusko's viewpoints and perceives into the regulatory environment as well as any possible ramifications for Ethereum ETFs in the dynamic cryptocurrency space.
Well, there's the logic, and then there's the emotion. So the logic would say, hey, SEC, you ruled multiple times that Bitcoin and ETH were not securities. Therefore, if you approve the Bitcoin ETF, ipso facto, or ceteris paribus, you should, approve the ETH ETF. That said, I watched, GG on the tube the other day, and I would say logic has nothing to do with this. He was all emotion. It's tougher to tell because all things are not equal. So one of the things that always happens in this part of the cycle. So we're in the late stages of, crypto summer. So, June, we swap over into crypto fall and get the parabolic part. In that late stages, you see this kind of price action where Bitcoin becomes the lead because people are anticipating the halving. And then the others, particularly ETH, they tend to move in lockstep, like at a ratio. At one point it was like 10 to 1 or 8 to 1. And they literally just move in lockstep. And then it filters down into the other coins too. And some of them actually then get on people's radar, and then they actually have their little spiky moves. And you saw that with Doge and Shiba in the last cycle, not so much this cycle, but at least people aren't talking about them as much. I don't see that silly little dog all the time. But I think this time it's frogs and other things. But I think in Bitcoin's case, and I haven't proven this in the sense of going to the wallets, but I shouldn't say. I've seen the wallets that were accumulating Bitcoin in advance of the Bitcoin ETF approval. I will argue those were related to BlackRock et al., that they were basically accumulating some that they could then go buy from and make a little profit too. And maybe it was friends of the firm, maybe it was hedge funds that they work with, maybe it was, I haven't done the forensics to find out who, but my guess is that was you saw it every day. And that was front running of a different kind. Like normally front running is, hey, I just want to get in because I know something's going to happen, like an earnings announcement, like Coinbase, which we'll talk about. So there was a lot of front running going on because there were people who were pretty sure this was going to be a blowout number. And you saw it was going up every day into the earnings and then ended up even more after the earnings. But that's a different kind of front running than this. This, I believe, was getting supply because when the demand for the ETFs came in, I think people knew it was going to be hard to go find enough Bitcoin to buy. And so that could be what's happening with ETH. So if people were doing the same kind of thing, then you'd have upward pressure. And you've seen ETH actually outperforming modestly in the last few weeks. That unlike the Bitcoin ETF, where you had pretty clear signaling by the sponsors that, yeah, we're good. And, the relentless meetings back and forth. I don't hear about lots of meetings and lawyers, doing lots of billable hours on ETH.
Mark Yusko provides a thoughtful analysis of the SEC's stance on cryptocurrency exchange-traded funds, ETFs, focusing on Bitcoin and Ethereum in particular. Although it makes sense for the SEC to approve Ethereum ETFs based on their previous designation as non-securities, Yusko highlights the subjective nature of regulatory choices by citing Gary Gensler's remarks. Yusko speaks to the current moment as the late stages of crypto summer in the context of the larger market and predicts a parabolic surge. He draws attention to past patterns where Bitcoin leads the market in terms of price movement and other cryptocurrencies, particularly Ethereum. Yusko then shifts the discussion to ETFs and talks about market swings that were seen previous to the adoption of the Bitcoin ETF, raising the risk of front-running. He makes conjectures about deliberate hoarding by organizations, possibly BlackRock among them, in order to protect supplies in advance of the expected spike in demand following ETF certification. Yusko applies this approach to Ethereum, investigating the possibility of comparable dynamics and price pressure. Notably, he draws attention to the clear legal arguments and lack of clear signals surrounding Ethereum ETFs in contrast to the more open procedure around Bitcoin ETFs. Finally, Mark Yusko offers a thorough examination of the way in which emotion and reasoning interact in SEC decisions. He also offers insights into past market patterns, front-running strategies, and possible factors influencing the approval of cryptocurrency exchange-traded funds, ETFs, thereby providing a holistic picture of the rapidly changing cryptocurrency landscape. You're simply amazing for watching till the end. If you want to brighten our day, hit that subscribe button and don't forget to leave a comment to let us know what you want to see more of in our upcoming videos. Until next time, happy investing.